Underwriting deals is such a major pain point for people. Most don't want to do it, and the people that are good at it are few and far between. That is why after 6 years of being in the industry and buying over 1,200 apartments, using my best-selling multifamily deal analyzer, I created Real Estate Lab, a full suite acquisition software for multifamily investors. We have built a product that helps investors automate their acquisitions and close more deals, all in a cloud-based platform. You can go to realestatelab.com and sign up today using the promo code TAG2 for 10% off your first 12 months. This is David Tupin. Thanks for listening.
Welcome to The Apartment Gurus, where twice a week, host Tate Siemer brings you deep dive interviews with the wisest gurus in the apartment investing industry. These experts are sure to create game-changing value and inspiration designed to catapult your business to the next level. Be sure to reach out to Tate at www.investwithgreenlight.com for access to his investor portal and Calendly link. And now, here is Tate Siemer and the Apartment Gurus.
Welcome, everybody, back. Another episode of the Apartment Gurus coming at you right now, and really excited to have our guest, our featured guest on today. Our featured guru, Mr. Hayden Harrington, is with me. And Hayden is a real estate entrepreneur focused on large-scale multifamily syndications. That sounds familiar. He has 120 million in assets under management. Sometimes people wonder what that AUM metric measures, and that measures the total value of the real estate that Hayden owns, is part owner of in some cases. So, and he's actively growing the portfolio right now. He's one of the managing partners at Momentum Multifamily, which is a commercial real estate group focused on buying institutional quality assets for their investors. So, yeah, true syndicator here. And with 120 million assets under management, that's a very, very nice, respectable, impressive level of production and success. So, Hayden, welcome to the show. I'm really glad to have you here.
Yeah, appreciate having me on, Tate.
Yeah, my pleasure. My pleasure. So, Momentum Multifamily, you're based in Dallas Fort Worth area. Is that correct?
Yeah, that's correct.
Cool. So, maybe Hayden, before we kind of jump into, the meat and potatoes part of the episode, if you wouldn't mind just sharing a little bit more about your background and, your skill set and kind of how you developed that and how you got to where you are today.
Sure. Yeah, absolutely. Really kind of got brought into real estate at a pretty young age. So it goes all the way back to when I was a teenager. My dad was an engineer growing up. And so as a product of that, just liked to do everything himself. And so about every other year or so, would get a single family rental. And as a result of, his engineer mind, he wanted to do it all himself, and ended up dragging me into all those projects when he needed a helping hand. So from a very young age, got exposed to real estate and the value of real estate. Learned everything and anything about renovating a house, because frankly, we were doing all the work ourselves. We never contracted anything out. So, wow. Busting up floors, tearing down walls, we've done it all. And it was a lot of fun, definitely taught me a lot. And it was a great education process. But ultimately, it really opened my eyes to, the risks involved with single family and the challenges that you face when you don't have scale. And ultimately, that's what really wanted me to, explore multifamily and go bigger. Just, for example, some of our rentals we had, we had some tenants that would just skip in the middle of the night and break your lease.
Right.
Tenants that would, steal appliances from us, or just call you for the dumbest stuff. And it's like, man, you could figure this out yourself. And, that gets old pretty quick, especially once you get a few of those. And so ultimately, and on top of that, I mean, doing all the work yourself, it's it's good to learn. It's good to know how to do, but if you're doing it yourself, it takes a long time. It's backbreaking work. And it's not easy. So, ultimately just wanted to get in multifamily, and just had to try and figure out, hey, how do I best approach, how does this space even work? Right. Because I knew it was similar to single family, but you're playing at a much bigger scale. So I needed to learn, how the game is played, and just started going to different networking events and so forth, meeting people that are involved in the space, talking to lenders, talking to brokers, talking to different operators, just trying to understand, for one, how does it all work? And then two, how do I add value? How do I plug myself into this space? Because I knew when I first got started, I would offer to work for free for anybody that would listen to me. And, I got turned down a lot. So I was scratching my head. I was like, okay, I'm smart, I'm capable, I'm willing to put in whatever work it takes. And I kept getting no after no after no. And so that really, I had to really think through what is value. And the more I thought about that, and the more I was going out to different events, I realized, for one, the people that were doing deals were putting on events, and that was a big kind of light bulb moment for me. And two, the two main sources of value that I figured out, there's a lot more out there, but the two that I kind of honed in on were either you find a deal or you bring capital in. Yep. I knew, with no reputation in the multifamily space, like what broker's going to give me or take me seriously at all. And so I kind of focused in on the capital aspect, and just trying to bring people together. I ended up meeting my business partner. I said, hey, what if we start a networking event together and just kind of see how it goes? My whole goal was to just present him in a good light, try and make his reputation a little bit better. And, as a result, we start building an investor list, and that's a pool of equity that we can tap into when a deal comes along. And, that event served a lot of great purposes, really. It was, for one, it allowed me to start to bring value to Dustin, my partner at Momentum. Two, obviously when you're, you get looked at as an authority figure when you're putting on something like that, and you're bringing in experts in their respective fields and educating all the attendees and so forth. So you're building a list. And then really three was it allowed Dustin and I to get to know each other, which I think is the most important part. Over the last really 4 years, I've seen a lot of people come and go, partnerships come together and fall apart. And that's tough to see, but your partners, the people you're doing these bigger deals with is so important, because I always like to say multifamily is marriage. Like, you're married to your partners and you're married to your properties. So you better like investors too. Yeah, very true. Yeah, you got to like it all. That's for sure. And so that networking event really allowed us to get to know each other, just on a personal basis, and then on a professional basis too, what we're good at, what we like doing, how we work together, how we communicate. And so it really kind of solidified our partnership over time, and was something that we wanted to invest into each other, and kind of went from there.
Nice. Well, there's a lot to unpack there. I was taking some notes, and just to rewind a little bit, you mentioned the risk of single family investing. And I think that's a fascinating subject to talk about, because so many people start off in real estate thinking they need to start small. They need to start with single family, maybe one property. And look, like, I'll just go ahead and assert that kind of business model is speculative, because you are buying properties that you think you can put X amount of dollars into and then sell for a certain price that's going to be profitable for you at the end of the day. And look, when you buy that property, typically, 99% of the time, you don't have an end buyer lined up. And so you are speculating that somebody's going to come along when you're done and ready to sell the project, and that they're going to pay at least a certain amount so that you can make, a profit that you've underwritten for the deal and that you projected. And that is just one risk element, but to me, that's a huge risk element. I remember when, we started in a single family, just like so many of listeners and everybody else, and you, Hayden. And, I remember very well when the first apartment building came along that we underwrote, which really fell in our lap. I remember looking at the underwriting going, man, this is like the first project we've ever looked at that's not speculative in the sense of it produces income predictably, and it has historic financials. It has tenants that are paying rent, paying the mortgage down, and paying the expenses. And that is such a different beast than any sort of single family project, a spec build, new build. And so refreshing to those of us that, worked so hard in the single family space, and every single project you did was like kind of high anxiety, because not only did somebody have to come along and agree to pay a price that worked for you and it was profitable for you, but then it had to appraise as well, by a single appraiser that's going to basically be looking at all the comparable properties around and coming up with an opinion of value. And, the valuation process in multifamily, as most listeners know, is quite different in the sense of that your income directly determines and dictates your value. And so I love that you brought that up, Hayden, and because it's not something that's talked about very often. People think, well, low barrier of entry, small investment in a single family, less risky, right? And really, it's not the case. So were there any other kind of elements of risk that you found in the single family space that are kind of mitigated with multifamily?
That's, we kind of touched on most of them. There's a lot of room for error on the single family side too. You basically, if you get that, you got one tenant. So if you don't get the right tenant in there, that's a major issue. On the flip side, on multifamily, if you don't get the right tenant in there, well, I've got 100 others,
right?
That can still allow me to pay my bills. So, especially during times like the pandemic that we just went through over the last 2 years, where there's eviction moratoriums, you can't get people out. And, if you're 100% occupied or zero and your one tenant stops paying your rent because they don't have to, that's going to put you in a really, really tough spot. And so, just having scale not only affords you to be able to, scale up quicker and do more. Your progress can be exponential instead of linear, but also it just spreads your risk out all the way around. There's more attractive financing, you can get non-recourse financing. Multifamily is just it's really, really attractive. It's definitely it's a business. You're buying a business. To your point about, you can look at the historical financials. You're buying a business that has a track record. So it's got to be taken extremely serious. I think a lot of people get into single family or real estate investing kind of as a hobby, as a side gig to their W-2, which is fine. There's nothing wrong with that. That's how I got started with my dad. He was picking up rentals on the side as he, had a primary job too. And there's absolutely nothing wrong with that, but you just got to be real about what you can do with that. If you want to have a half dozen or a dozen rentals and do your day job, that's fine. If you want to do real estate full time and have thousands of units, you got to take it. You got to go all in. You got to take it extremely seriously, and you got to treat it like a business.
Right. Yeah. Business in a box. Some people sometimes say, and the business just happens to be providing something that everybody needs, which is housing. A universal need. Every single person on the planet needs a place to live. And, that's another risk mitigation. But yeah, your whole point about losing a tenant and, having somebody skip on you or not pay rent or enforce a moratorium or something like that. It's so easy to get your head around that one for, listeners that are thinking, well, I'll buy a couple properties a year for 5 years or 10 years, and then I'll have this portfolio. And just know that there is that element of risk that 100% of your income could be gone by one tenant's decision to not honor their lease. And that's a heavy impact. I live in a nice neighborhood in Salt Lake City, and there's a place across the street from me that's a rental. And dude, it's been sitting vacant for probably 4 months now. There's been contractors in and out. And I'm thinking, this poor landlord is losing, 25, 30, 40% of his income for the year just based on not having one single tenant in the building. And that's painful. And like you said, to your point, if you have 100 units and 100 tenants and 1 or 2 or even 3 or even maybe a few more skip out, or you have to evict or whatever, you've got that buffer of the other 95% of the tenants, hopefully paying their rent and taking care of everything that you need to take care of. So you minimize the impact. So I think that's a really good takeaway for listeners that, are maybe in the single family space and wanting to get into multifamily or considering it. You should feel good about getting into an asset class that is, I'll just put it this way, it's more professional, right? It's more of a business approach. It's more of a business model than it is a hobby model, which is like what you said. When you have a W-2 job and you have some skills in real estate or remodeling or whatever, and you think that you can do this profitable side project. Well, you can, and people do all the time, and people do well, and you did well and well enough to get along to your next chapter. Same with us, but man, there's some painful stuff in single family, and better than anybody by doing all the work yourself. And, when we did single family projects, we would GC ourselves. So we were always on the job site. And, and you mentioned scalability, right? Like, it's very, very difficult to scale from a single family model, to do more than 4, 6, or 8 houses a year. You have to have a crew. You have to have a great organization. You have to have somebody pulling the strings at the top. And so you might as well, at that point, in my opinion, instead of dealing with 5 units a year, you might as well deal with 50 units a year or 300 units a year, whatever it is. Because ironically, even though it's such a bigger asset in terms of value, you've just mitigated so much risk in your business model by scaling up. Scale's your friend in this business, wouldn't you agree?
Yeah. 100%. Honestly, 5 single family rentals is probably the same amount of work as 100 multifamily units.
That's right. Well said. Yeah. Yeah, totally. And that's another thing that you hear when you hear people talking about making the jump into the commercial multifamily space is like, look, even in commercial, like closing on a 10 unit building requires all the same things that closing on a 200 unit building does. You got to go out and find a loan. You got to do due diligence. You got to, negotiate the contract. You got to source the deal to begin with. And then once you're into it, you need to raise your capital. And those are all things you need to get an appraisal, third-party reports, insurance, property management. You got to figure all those pieces out, whether you're doing it for 10 units or 100 units. And to your point, Hayden, it's really a matter of the workload being very, very similar, no matter how many units you're doing. Yeah. So okay, cool. So I want to know a little bit more about, you talked about this event that you and Dustin, your partner, started and put together and kind of cut your teeth on, and kind of, it sounded like almost like a catalyst in your progress and in your trajectory. Tell us a little bit about that event. What's the nature of it? How does it work? And how'd you guys get it started?
Yeah, we started, it was just called, that's where Momentum came from. We called it our Momentum Meetup. It's strictly for multifamily. And we wanted to kind of plant the seed in people's mind that when you came here, you're going to make some progress. I'd been going around to different events here in Dallas and started to realize that they all kind of looked the same, felt the same, and there was a lot of room for improvement. Typically they were done at restaurants, and it's easy. Every restaurant's going to say, sure, bring 100 customers in here for us. But the problem is it's not really conducive for networking and meeting a lot of people. You sit down in your seat, you're talking to the two people next to you. You got food coming in and out. It's noisy. It's just not a great environment. It's hard to move around the room. So we just, paid attention to the little details. I like to always say the little details make the biggest difference. And, the first thing was, hey, let's get it out of a restaurant. Let's do it at an office. So Dustin, he had done some work with Madison Title, a title company here in Dallas. And they said, yeah, absolutely. Come on in, come into our office. We'll cater it. We'll have free food for everybody. And, we started paying attention to, how people check in, the follow-ups that they get after they leave from the events, all of those little things that kind of add up to an experience. And, the thought is, well, if they have a good experience with us coming to some sort of event where they walk away feeling like, hey, I gained something from that, that maybe they'll correlate that experience to what it would be like if they would invest with us. So that was really the intent. And, we'd have a digital check-in for them that automatically put them in the back of our CRM and would send them a follow-up, 2 hours after they had signed up when they're getting home. And, even down to the little things, like we wrote all their name tags so that all of the handwriting was uniform and legible, because I don't have the best handwriting. And sometimes if it's hard to read, you don't want to mispronounce their name or anything like that. So just thinking through stuff like that, we would do an hour of networking, an hour of some sort of presentation, or have some sort of speaker in for an educational aspect. And like I said, free food. Who doesn't love free food? That was probably our biggest hook to get people in the door.
Right.
And did that for a while. We did that for about a year. We grew it from, first one had about 20 people, and we filled the room with about half of them. So, but the next one had 40, then 60, then we were 100 plus. We had to move to a convention center here in Dallas, and we were renting out this huge space with a stage and everything. And, it was a really cool experience. And, it definitely allowed, Dustin was already kind of authority in the space, but through kind of osmosis, being around him and putting these events together a little bit started to rub off on me. And, we started looking at more and more deals together and underwriting. And that was really my education. He was definitely my mentor and taught me everything. And, COVID kind of shut us down for the networking wise, but we pivoted to online, started doing online events, and then that, opened our eyes even more, because, we were averaging, like I said, about 100, 125 people out at our networking events every month. But then we started doing online stuff, and we doubled and tripled the amount of contacts we were getting, because you could do Zoom. I mean, you could meet people just like this, and you get all their contact information, follow up with them, get on phone calls, one-on-one. And those, really opened our eyes, because now we could expand our pool beyond just Dallas too. There's a lot of people on the coast, for instance, East Coast, West Coast, that want to invest in Texas. And, the in-person meetup didn't allow us to connect with those people. So, COVID actually allowed us to expand, really fuel the expansion of our list. And we grew that quite a bit. And we, after that kind of settled down, we've gotten back to doing a little bit in-person networking, not a ton, just because, we've been busy with deals, but we'll probably get it going again. We're about to move offices actually, and we'll have a nice space where we can actually bring people into our own office, which would be cool.
Yeah. So that sounds amazing. And what a great way to launch a career and a business and a brand and a partnership. Like, it sounds like that event that you guys, put on together really cemented your relationship. And you mentioned that he was your mentor, and we talk all the time on the show about the importance of mentorship and coaching and paid coaching programs and whatnot, and how important those can be to really accelerating your trajectory and your timeline when it comes to getting into this space and into this business. And I've heard lots of ways of starting partnerships. I've actually never heard of starting a thought leadership platform the way you guys did as a way of doing that. But that's brilliant, because you get to see how you work with each other and how you coordinate and who does what well and who naturally falls into different roles and responsibilities, kind of what your superpower is. And you're doing that in a context of like no risk. There's like, no harm, no foul kind of thing. If things don't work out, well, you don't have a $10 million apartment community on the line in the partnership. You just have a thought leadership thing that you can maybe pivot a little bit on and keep going or whatever. But that in and of itself seems incredibly valuable to me, that you guys were able to do that. And then, the aspect of building your investor network, your investor list, that's another really brilliant aspect of having any thought leadership platform, whether it's an event, a meetup, a podcast, a book, a speaking career. All those things are great ways of building your brand, of building your presence, letting people know what you're up to. And I love your attention to detail. I wanted to mention that. In terms of really focusing on the little things, like you said, that make such a big difference. The handwriting of the name tags, your follow-up afterwards with people. You put them in a CRM, and you start marketing to them, right? You call them, you email them, you put them on auto drip email lists. That's really good stuff. I'm really impressed. So it sounds like that's not something you guys do anymore. You kind of were talking about it in past tense.
Yeah. Like I said, COVID kind of shut us down. We still do like virtual networking every other week. We do Monday evening virtual Zoom, because we've just seen a ton of value. I mean, we've met some really great people from there. We've seen partnerships come together as a result of it. And it's just a great way to tap into people in different locations. I think if anybody wants to get into this space, especially the multifamily, and, you set big goals for yourself, you continuously want to expand, you're going to be limited to what your equity pool can sustain, basically. So, if you want to go after bigger and bigger deals, you've got to constantly be expanding that pool. And that's really where, networking comes in, and then track record and so forth. So I think I think you should always be networking and meeting new people, and just constantly thinking of ways of how can I expand our database, reach more people, and then, educate them on your process, why you should go with us as opposed to a dozen others, and so forth, so that you can, build a really solid database that's, wants to grow with you guys and do more and more deals.
Yeah. Yeah. So smart. What a great way to do it. And, you know, I'm doing some coaching right now with some clients that are working on getting into their first deal and all the things that go along with that. And when you're starting off in this business and you're trying to get that first deal done, man, it's a gargantuan effort, and there's a lot to be doing all the time. And networking, building your network, building your base of colleagues, your base of potential investors, your base of potential partners, like that's a big part of what you need to be doing at that point in your career. And, you know, for me, like with my coaching clients, these virtual meetup groups are very, very much a part of that launch sequence, if you will, into the space. Like they're all going to different virtual meetup groups and meeting people. Do you guys do breakout rooms and that sort of thing where people can kind of network and whatnot?
Yeah, absolutely. Yeah. We break them out into, you know, smaller groups, so it's a little bit more personal. And then, you know, every 15 minutes or so, we mix it up, just so you can connect with a lot of people over just a short amount of time.
Yeah. It's, you know, COVID had so many blessings in disguises. I think as far as different elements of business, we started a meetup. My partner Chelsea Garber and I started a meetup in Salt Lake, the Salt Lake City multifamily meetup, and thinking that it was going to be an in-person event. We did one in-person event, a meetup, and COVID hit like that. I think was it November-ish or kind of December, January-ish that all kicked into gear in 2020. And we immediately pivoted to an online model, and it worked beautifully. And like you said, all of a sudden this Salt Lake City multifamily meetup might as well have been called the North American multifamily meetup, because you pull attendees from everywhere. And it gives you the ability to really go to kind of national with your brand and your business. And look, I mean, some of us are lucky enough to live in Dallas, Fort Worth, right? Like that's a terrific apartment market to live and work in. A lot of us are in markets that are prohibitive for the kind of business that you want to do. We're in Salt Lake City, which is a wonderful valuation market, but it's not a great cash flow market because stuff's so expensive here. So we invest in other markets out of state, Columbus, Ohio, and Oklahoma City specifically. And the reason that we do that is because our model that pays our investors a preferred return on an ongoing basis really requires that. So, you know, we kind of have to have a national presence, and it's been, you know, highly beneficial for us to have a national presence as far as growing our investor base. And obviously with the podcast, that's kind of got a universal reach as well. So the online meetups are legit. And if listeners, if you are looking for something to add to your activity list on a week-to-week basis, tap into one or two or three of these meetup groups that meet every week or meet every other week or sometimes once a month, and really engage, because it's not just showing up once and getting a bunch of tips and maybe meeting 3-4 people and following up with them. It's showing up every single time so that you become a presence and a staple in that group, and people recognize you. And it's a long game. So you guys still do that? You say you do it twice a month?
Yep.
Yep.
Yeah, every other week.
Mm-hmm. When is that again?
We do on Mondays at 6 p.m. Central.
6 p.m. Central on Mondays, every other week. And for listeners to join that, how would they find it?
If you just go to, we post about it. We've got a Momentum Multifamily Facebook group. You join that, you can definitely get notified about it. And then as soon as you sign up, you get on our email list and notified about, any other networking events that we got going on, any deals that we come out with, and so forth.
Yeah. And look, this is another really great point of value for listeners is get on as many of these email lists as you possibly can with operators and syndicators like Hayden and his partner, Dustin. They're going to be providing you with not only value add educational emails that are going to really enhance your business, but you're going to see live deals coming out, and you're going to see how they're presented. You're going to see what points are important in those deals, the metrics, the returns, the business plan, the value add, et cetera. And you want to be looking at as many deals, as many real live properties as you can, especially in your initial ramp up to doing your first deal, so that it's like soccer players go to soccer games to see other people play, and same with any legit sport. Most really, really great players are also really big fans of the sport. And so, you tapping into really successful operators and syndicators that are doing deals and seeing how they do it is of tremendous value. So, okay. So Momentum Multifamily on Facebook, right? Okay.
Yeah.
Perfect. So yeah, listeners, go there, go to Facebook, find Momentum Multifamily, follow that group, join the group, however it works. And then go to those meetups, like every single one. If you can get there, just block it off on your calendar and get to every single one. Okay. So just to switch gears a little bit, talk a little bit about your first deal. Like, how did you kind of crack the code in getting into your first large scale deal?
Yeah, it was kind of a long journey, that's for sure. Dustin and I, we teamed up early 2019. We actually got our first LOI accepted in March of 2020. It was I think it was like a 120 unit deal, C class, value add deal in the mid cities of Dallas. And that's really when COVID started shutting everything down and the lockdown started to take place. I remember because it was a crazy week. We had our offer accepted on Monday, and the subsequent days they started shutting everything down, and we're like, wait a minute, what's going on here? So didn't know to be excited or scared. By the end of that week, Friday, we actually had to rescind the offer. We said, no, we gotta table this and see what's going on here. And, after keeping tabs on the deal, they ended up just refinancing. We lost that one. But, so that was kind of a bummer, put in a year and a half's worth of effort, and, you get your first offer accepted, and then a global pandemic hits.
Yeah. Right. Who saw that coming? Yeah.
Yeah. So that was a roller coaster, but, ultimately it led to a much greater, much better opportunity. Because we started to ask the question of, where's the risk and where's the opportunity on the other side of this? And so, we kept it very proactive. A lot of people put pencils down. They said, well, we're locked down. What's the point of underwriting, looking at deals? And that was not us. So we kept talking to brokers, talking to lenders, say, hey, what's going on? How, what deals are you seeing come in, and so forth. And, fast forward to, I think it was October of 2020 was when we ended up landing a deal. It was 228 units built in 2012. So it was a class kind of A- deal in Northeast Houston. And, we made the switch as we began underwriting deals and looking at more and more. We started to see you've really got risk on a few different aspects in multifamily. You've got the tenant risk, which everybody was kind of dealing with. You can buy a better tenant base as you move up the food chain and classes of deals. So that was important to us. We wanted a tenant base that could work from home, and a lot of your C-class workforce housing cannot. So we saw that as a pretty big risk if your tenant base is not able to go and work. And then also, we didn't see a light at the end of the tunnel at that point. So we didn't know how long it was going to last. And then what happens if, you got a chiller that goes out, or, you got cast iron plumbing underneath that burst or something. You got a major capital expense on some of these older assets. That was higher risk back then. So those were the kind of two levers that we wanted to really look at. And buying a newer asset helps kind of alleviate some of that risk on the property side and the tenant side. So started looking at newer deals, and then we realized, man, there's still a good value add here. Ended up, we got our offer accepted on this deal. They had a loan coming due, so there was motivation to sell. They needed before end of year close, and so we just had to get it done. And so and there just wasn't a whole lot of buyers in the market back then too. I think there was only 7 to 10 total offers on the deal. And in a normal market, especially here in Dallas, we'd see 20, 30, even 40 offers sometimes on a single deal. So wasn't a whole lot of competition, wasn't a whole lot of hard money back then. And, we were able to get to best and final and end up giving them the best terms. And, in hindsight, that was probably the best time to buy if you could.
Yeah, absolutely.
But so it took a long time. It took really 2 years to get that first one done. But, it was a 228 unit deal built in 2012. So, really no complaints on my end.
Yeah. I mean, that's a heck of a way to start off a portfolio. You mentioned too, that the advantages of more of a class A, maybe class B, B plus sort of asset. And you mentioned buying a higher quality tenant base. I like that. I've never thought of it that way, that by paying more for a property per unit, you're also paying for a much higher quality tenant that's a lot less likely to skip out on you, is much more likely to pay rent, going to take better care of the place, not going to cause problems, not going to steal appliances, not going to do all the things that can come along with the more workforce level housing. I like that point. And I think it's a good thing to notice that, it took us 2 years, or 2.5 years. We did some smaller, we did a 12 unit, a 20 unit project here in Utah. And we did that kind of during our ramp up time into the larger scale stuff. We knew that we wanted to be large scale all along. And, a lot of people that know my story know I joined a coaching mastermind with Corey Peterson and really learned the business from him. He was kind of my mentor, like you're Dustin. I had Corey that gave me the base knowledge to go out and pursue deals, meet brokers, meet lenders, property managers, get to know the markets, how to do all that. And again, that mentorship piece is so key because it does give you a sense of confidence to go out and start doing the things you need to do. So well done on that first deal, man. That's a great one. And look, this is a long game. Like, this is definitely not a get rich quick game. I know that when I started, Corey said, yeah, Tate, it's probably going to take you a year to get that first deal. And I'm like, no way, dude, 6 months. There's no way I'm going to be sitting around for a year, not doing a deal. And sure enough, it took longer than a year, but it's kind of like, there's that analogy when you plant a bamboo plant in the ground, you plant the root, the seed, so to speak. And then you water it and nurture it for 5 years without ever seeing anything come up through the ground. Like, you don't even really know that it's there unless you planted it yourself. And then all of a sudden, man, year 5, boom, you got 40-foot stalks of bamboo coming up, or shoots of bamboo. I think they're called shoots of bamboo coming up. And it sounds like that's kind of what happened with you, getting just a killer asset right out of the gate. How much was the purchase price on that?
Yeah, we bought it for 29.3. So about 128,000 a door, which for anybody that's familiar with deals right now, it was a bargain for sure.
Yeah, that's awesome. And just to ask you a little more about that particular deal, what did you do for equity on that deal?
Yeah, so we raised a little over $10 million for that one.
Wow. Organically through your investor base?
Through our investor base, we did have some co-sponsors helping us out a little bit, and it was challenging. I mean, we're seeing kind of similar things right now with interest rates. When the market is a little choppy, equity tightens up, and it's pretty emotional. So, a lot of times when there's really great deals out there, the equity piece is hard to solve for, and then when deals are very expensive, the equity is flowing really well. So. Equity was a bit of a challenge, and we had a great team, and I think it goes back to the value in your partnership, because we were pretty stressed there. We had a lot on the line. Weren't sure if we were going to get it done. We ended up having to bring in some preferred equity from a family office, and it actually worked out to our LP's benefit a little bit, and that was just a solid cash flow deal, so it could support it. And so that ended up working out really well, but it was tough. It was my first raise. It was Dustin's biggest raise by quite a bit. But we believed in the team. We believed we were going to make it happen, and thankfully we got it done.
Man, that word belief is so powerful, I think, and it's so important in this space, because you're gonna have to make decisions in this space when you're building your business, and you're gonna have to make decisions without having all of the ideally required knowledge and information and data. And there is an element of, you got to believe that those gaps, those question marks that are out there, like when you put a deal under contract and you got a $10 million raise and you're not exactly sure how that's going to all come together, you got to have that sense of belief, in my opinion, man. And I don't mean to get like woo-woo and spiritual and everything else, although I do kind of geek out on that stuff. But I just think that having that core confidence, that core belief in yourself, that you've got these challenges that are going to need to be met and problems that are going to need to be solved. But look, as entrepreneurs, no matter what business you're in, the bigger problems you solve, the more money you make. And, that's what we do as entrepreneurs, is we solve problems. And sometimes we have to create a problem to solve it, right? Like we have to put a property under contract and present ourselves with an equity raise that then we go out and execute on. And you mentioned bringing in preferred equity. Like, for listeners, there are options, and, there's large institutional sources of equity that either will do a preferred equity piece, or maybe a joint venture equity piece, or an LP equity piece with you. And they can write big checks. Like a lot of those places, they don't even want to write a check less than $5 or $10 million. So, these are all like possibilities, right? And with equity, I like what you said about kind of how when markets get choppy, equity pulls back a little bit. That's what we've seen recently in our experience. But at the same time, especially now in today's world, there is so much capital out there that needs projects with yield. And that's something that as operators and syndicators, we're able to provide. And so it along with growing your own organic investor base that are going to invest as limited partners in your deal, I'm a big believer in growing your family office base, your equity broker base. Like there's all these firms out there that specialize in placing equity with specific deals. And, we've got 4 or 5 active equity brokers, is what I would call them, that we deal with on a regular basis, that are constantly working on our deals. So I love that you guys went that big on your first deal. In fact, I think, I've done 140 episodes of this show, and we often get into like the first deal conversation. I've never heard of one that big. That's a big, nice chunk of a deal. And it's a great way to start off a portfolio, man. 30, did you say 30 million-ish? Was that where you were?
Yeah. 29.3 is just under 30.
Yeah. Yeah, that's super impressive. So, and now you're up to about 120 in AUM.
Yeah, we just closed on a deal about 2.5, 3 weeks ago. So we got 772 units, all based in Houston. And
wow.
About
so in one deal, 772 in one deal.
No, that's between three.
Okay,
but that's our total unit count right now in Houston.
Yeah. Okay.
So yeah, well, we're focused on Houston. Again, we're big into systems and processes. So it's kind of cool. All our Houston assets are actually named after Dustin's son. So it's all the Henry at something. We've got the Henry at Liberty Hills, Henry at Deerbrook. We just closed on Henry at Rosenberg.
I love it.
And again, you're building a business when you're multifamily, and it's all about systems and efficiencies, right? So, every time now we take over an asset in the Houston, Henry's our Houston brand. So anytime we take over an asset in Houston, we already know what we're calling it. We already know what colors we're painting it. We already know what types of unit upgrades. And then also when you focus on a certain niche, so we're looking at 2000s and up. We like to call them first gen value adds in the Houston market. We know what we're getting into. Our contractor knows the scope of the renovations. Our designers know exactly what look and feel we're going for with our Henry brand. And, frankly, brokers like to see assets get taken really well care of too. So it's opening a lot of doors. It's making, executing the business plan a lot more seamless. And so yeah, we're just excited to grow and to continue adding, good assets to the portfolio.
Yeah. And it sounds like you guys are doing things right, man. I love your branding. I love the uniformity between your properties, same name, same colors, same decor. Like that's building an image. It's building a brand. It's building a presence in the market. And, the brokers, I guarantee every broker in Houston knows of the Henry apartments, that there's the different ones. And therefore they know you and Dustin, they know who you are and they know what you're up to. And they know that you transact and that you're players and that they can likely bring you a deal. And if it's a good enough deal that you're going to close on it. So important, so key. And, just congratulations, man, on how quickly you guys grew. I know that first year to 2 years was a little bit painful because when you have a vision and you know what you're doing, you know what you're trying to get to, and you have an objective and you don't necessarily have proof of concept in hand yet. Back to that belief thing, man, you got to believe that you're on your way. Because if you don't believe that, nobody else is going to believe it. And you guys were certainly on your way, and you did a lot of the things, the networking, the thought leadership piece, your Facebook group, your online your online meetups, all those things that are so key in building a foundation in this space. You guys tackled while you didn't have deals. Like, I mean, think about that, listeners. Like, here's Hayden and Dustin. They don't have a property yet. Maybe Dustin did. I'm not sure how that worked, but as a partnership, you guys didn't have any properties yet you went out and became experts in the field by starting a meetup group and bringing in speakers and building your credibility that way before you did any deals. And I think that is brilliant. I started this podcast before we owned any properties. It was originally called The Apartment Guys, and which was, when you don't have any apartments, that's kind of audacious really to make that claim. But nonetheless, you got to be bold. Fortune favors the bold, and you guys got out there and did it. And I can tell you're going to be uber successful, man. Like you guys are just getting started. Do you mind me asking how old you are, Hayden?
Yeah, I'm 28.
Yeah, I figured you've got a young. For those of you watching on YouTube, Hayden definitely has a very professional, but also very young looking image, but you guys are pros, man. I can tell that you're really doing things the right way and you're doing them for the right reasons. And I know that no business model is ever perfect. There's always room for improvement, but seems like you guys are doing a lot of things right.
Yeah, no, I appreciate that. We definitely try our best. And Definitely agree that it all goes back to belief. It's hard to keep that belief when you're just spinning your wheels and not really seeing the traction yet. But Dustin and I, we always say to each other, if we're going to bet on somebody, let's bet on us. I love it. Let's set the goal and just put in the work. And it's not a matter of if, it's just a matter of when.
Oh man, I love it. That is a perfect place. Unfortunately, we're out of time here, Hayden. That's the perfect place and perfect way to kind of wrap this up is, if you have the belief in place and it's real and it's authentic, you're already on your way to that vision. And you got to have that faith component to really pull you through at the right time. So, well, dude, if listeners want to reach you and obviously is the Momentum Multifamily Facebook group the best place to reach you?
Yeah, that's a great place to connect and kind of get plugged in. Happy to always answer questions. So my email is just Hayden, Hayden at momentummultifamily.com. And then our website's just momentummultifamily.com if you want to check out what we're up to.
Awesome. Great stuff. Well, this has been a really great conversation today, Hayden. I really appreciate you being on the show. I wish you all the best luck. Let us know at Greenlight and my team how we can ever help you guys. I'll be tuning into your Monday night meetup group, hopefully here real soon. So let's stay in touch and see how we can help each other out along the way.
Awesome. Yeah, sounds great, Tate. Really appreciate you having me on the show.
Yeah, my pleasure. Absolutely. So, and listeners, it's always a pleasure to have you along for the ride. We love you guys. We want you to be successful. That's all this is about, is delivering information and inspiration to you that really elevates your business, your career, and takes you to the level that you want to be at. So thanks for being along with us for the ride, and we'll see you on the next episode of The Apartment Gurus. Take care, everybody.
This has been The Apartment Gurus with Tate Siemer. If you enjoyed this episode, be sure to subscribe and leave a rating and review on your favorite podcast platform. To contact Tate, go to www.investwithgreenlight.com for access to his investor portal and Calendly link. He loves to hear from you and thanks you for being a valued listener. Just a reminder that you are the guru. See you on the next episode of The Apartment Gurus.